Hey, welcome everybody. We're so glad you're here with us. Uh, we just talked about it, but we're going to talk about it again. We're going to talk about growth today, and I'm really excited. We've got Julie here from Next Level now, and I just realized it doesn't have your fun little name badge like it does the rest of us. So I'm going to see if I can fix that for you.
All right. They already know me. This is the second time, they don't need to see me
Yeah,
over there.
yeah.
All right.
You're kind of a big deal.
I don't know. Well, not that big. Growing.
Well, hey, so let me give you guys a quick rundown of what's going on. Here's the agenda. Welcome. I've introduced you to Julie. We've also got Sonia here from Next Level Now, and I'm really excited to hear what they've got going on. We're going to really talk about the content for the majority of the time. We're going to do a little AMA toward the end. That way, all of the questions that you all have, we'll do our best to get to those. And then just to let you know, whenever the webinar is done, or if you need to leave early, it will ask you to do a post-webinar survey. That survey is 2 questions. How did we do? How did you like it? And then if you give us your email, which I mean we already have, you already registered. If you give us the email so that way we can associate the survey with you, then we'll enter you for a chance to win a $250 Amazon gift card. We're not going to call you or anything just because you fill out a survey. It's literally, we're just trying to bribe you to tell us how good we did or how bad we did, whichever one it is. So, with that said, I am going to pass it over to Julie. Thank you, Julie.
Yeah. Thanks, Steve, and hi, everybody. I'm very excited to be back for another session. Last time we talked about implementing software. And so today we're going to change our gears into something that's a little bit more to the core of a scaling MSP, which is financial maturity. Now, when I say financial maturity, I don't want to turn this into a boring talk, but also not going to try to convince you to turn your finance department into the very typical stuffy finance offices. And we're going to, we're talking about building the financial visibility and habits that make your life easier, your business stronger, and your options bigger. Whether you want to grow, you sell, or just simply sleep better at night, this is the stuff that helps you to get there.
Awesome. Thanks, Julie. And I only have a little bit to add here, but Next Level, who are we? We're everyone knows fractional CFOs, kind of a catchy term, but we like to call ourselves an embedded finance team for MSPs. So any level of involvement we can drop in and elevate a finance team existing. We don't have to replace a whole finance team. We complement them purely and really level them up and help with that strategic growth. So everything is led by a CFO. And then you can see all the other roles that we have in our company that help each other elevate and get more done. So Julie is one of our very talented technical controllers here at Next Level. I'm really excited. She's going to walk us through all these tips today. So thank you, Julie.
And just in case, I'm sorry, real quick,
Yeah.
the chat's open, the Q&A is open. This is your webinar, everybody. So
Yeah.
feel free to keep communicating with us.
And I'm going to give everyone the AI tip of the day
Uh-oh.
because I forgot to remove the Made with Beautiful AI on the bottom here and the top. We do pay for the product. I just forgot to take it off. So everyone know, I told Steve this trick. Julie and I have been using this awesome platform here, Beautiful AI, and it is really good. It's an AI system for generating and then tweaking, and it gives you images, really like a PowerPoint spoof. So everyone take that tip, your AI tip of the day.
Awesome.
I like it. That's another level of growth I didn't even consider it putting in here. But so here's the roadmap of where we're headed today. We're gonna hit some 4 high impact shifts that we can do to gain more clarity and control and get confidence in your finances without, again, adding that added complexity to your life. So we'll talk about, how to spot hidden profit leaks in your pricing and service delivery, because you'd be surprised how much money actually slips away without sometimes us realizing it. We'll look at forecasts, and so how to do that with confidence so you can, plan for growth, not just hope for it. We'll dig into some KPIs that really matter and the ones that actually drive decisions, not to just have a decorative dashboard that we pretend we're good with it. And then finally, we'll do a few quick wins or kind of a roadmap how you start implementing this in your day-to-day life without being overwhelming and just get again that immediate clarity. And
Perfect.
even if you get one of these shifts in place, you'll really feel a difference. And when you start stacking them together, that's really when the magic happens. So we'll start unpacking that. I actually genuinely love this slide, not only because of colorful umbrellas, but because of what it means. So finance as business insurance. Now, when I see or talk about finance, it's not just numbers on a spreadsheet. I see it really as that security net. I don't mean the type of insurance that you can go in and file a claim when something goes wrong, but the kind of insurance that keeps things from going wrong in the first place. If you have the right financial visibility, you can weather pretty much any storm with, whether that is losing a big client, unexpected expenses, or a sudden market shift. You're not scrambling. You're ready to take that on. And here's the thing: it had nothing to do with the size of your company. You can be $100,000 MSP, $1 million, or a $10 million. I see kind of sometimes often that the $1 million company is stronger, more financially bulletproof than the 10 million who is just hanging on by a thread. So it really is just about having that readiness in your systems, in your data, and the discipline to make the right decisions. Before problems becomes that emergency. So here's the upgrading your mindset. There's the two. This is where the shift kind of happens. So the two versions of this. So on the left, you see that $1 million mindset. It's bookkeeper centric. It's reactive and focused mainly on costs. So this is where you're competing on price. Labor is basically all lumped into overhead, and everything is bundled together in your products, making decisions, based on your bank balance. It's about being reactive. It's what really happened. You're not looking forward. So on the other side, on the right, you see the $10 million mindset. And it's that CFO-led, proactive, and strategic planning. Here you're competing on value. You know what value you provide to your customers. So that's what you're selling. You're not kind of racing to the bottom. You're tracking labor as COGS, right? So you make sure that that's in the right place. You're measuring profitability by each offer, and you're making adjustments based on real data. Forecasts are tied to your strategy and not just, last year's numbers. So the difference isn't working harder, and I hope I kind of put that, you can see that in here. It's not about working more, spending more time in this. It's just about leading your company smarter. And I put a little bit at the bottom here, reactive cost focus, operations, stall growth, while proactive value focused leadership accelerated. So it's really about setting the right space.
So, and you, I have no idea. So I may be setting you up for failure with this
Okay.
question. So, $1 million mindset, $10 million mindset. What about like a bigger business? Like, what if we're looking at like a 50 million or $100 million? Like, what changes going from 10 to like 100?
Honestly, nothing.
Really?
I'm sure. Well, yeah, I mean, that's probably more of an easier high level summary.
Mhm.
But, the principles aren't the same. As long as, a $15 million company is going to have all the things that we're going to talk about in here. It's going to have a forecast. It's going to understand cash. It's going to have certain policies around ARR to control, control outcomes. You will never be able to predict everything that happens in your business. There's always going to be some crazy customer or some crazy churn that happens, but you minimize that, right? Again, it's that concept of insurance. You're minimizing your risk. You're mitigating your risk up front, and then you can just kind of move forward with much ease. So that's really that 50 million, 100 million, no matter how big you get,
Okay.
whether you're acquiring companies or you're just, pulling yourself up with the bootstraps and doing organic growth. this is going to apply regardless.
But you can't get to $100 million company with the mindset of a $1 million company. I used to work for a company that had a $1 million mindset, and we got to 12 million, but it was massively inefficient. There were way too many manual processes. You're still operating on cash basis. And guess what? That hurt. It hurt the sale.
Yes.
And so that is the biggest thing. It hurt the valuation of the business because it wasn't mature and it couldn't scale to 100 million because it didn't have that level of maturity. So this is just preparing you guys to up your multiples, right? Like everyone's talking about. And now it's a lot easier to get from 20 to 50 million because you have all the systems in place.
And I think that's really key. Can you grow to 10 million without this? You can.
It's just going to be really painful.
It's just painful.
It's if it's
not painful for you as the owner, it's going to be painful for your team or both, right? Because I know from talking to company owners, you guys are legitimately stressed at night sometimes. There's the am I going to make payroll next week? I don't know. What happens if I don't get this in?
Right.
So, there's tools out there and people you can surround yourself in. Ideally,
man, that would have been a great spot for me to just segue right into an alternative payments concept,
Yeah, I mean, you gotta wait, Steve. There's more coming. Wait.
Yeah, no.
Wait,
so
wait.
I do have one more question now. So, let's go the other way. So I feel like the $1 million mindset is probably even different from like the $100,000 mindset, because I guess in my eyes, 100,000 is probably just the owner doing all the work himself. And if they're really bad at their job, no offense to anyone, I'm so sorry. They're doing the books themselves and they're filing the taxes themselves. And, between QuickBooks and TurboTax, I mean, they have everything they need, right? So, what would you say is the $1 million mindset at least better than the terrible thing I just said, or is it not far off?
I'd say not far off in a sense.
Okay.
Even if you're just starting off the gate, $10,000 is what you're making. In my mind, you should have the stuff in place. You should have the $10 million mindset in place. It's going to help you grow. It's going to help you have less stress. I totally understand that if you're starting off, obviously you're going to want to sign every contract anywhere. We're definitely getting a little bit ahead here, but I want to answer your question, right? But you're going to want to sign every contract you get because that's your livelihood. So there's no judgment to say, okay, if, one of these 6 little squares, that's where you're at, or there's different, places or different mindset that you have currently in your growth. It's not bad. We just want to make sure you're giving you the tools to think ahead. We don't walk outside looking down, right? And just every one step we're looking and we're going to get there. No, we lift our heads up. We look forward and say, okay, here's where we're going. I want to get there. Right now it might be different, but in the future, this is what we're going to get to.
Okay, great.
Okay.
So we're going to hit the profit mindset shift. So this is where, knowing your numbers is going to really change the game because it's going to impact who you serve, how you price, and ultimately how you grow. So on the left, you got the $1 million price-driven mindset, and there's no real target customer. If someone has a checkbook or they're good or they're nice, then they're in, even if it drains your resources on the back end. There's no visibility into what it actually costs to serve those clients. There's no view on burn rate, no utilization or labor per client. So that means pricing turns into a race to the bottom. So I was trying to mention that race. So what discounts and what bundles can we throw them to just win that deal? And marketing becomes this shotgun approach where you're chasing every lead instead of focusing on the ones that actually make money. On the right side, you got the $10 million value-driven mindset. You've defined who your target customer is, and it's not based on a hunch. It's built on the real data from your labor allocation, your utilization, and the cost per service. You know your profitability by client and by service line, so you can see exactly which clients offers drive sustainable margins. and pricing becomes strategic. You design the bundles that offers that are profitable and, that you are comfortable in delivering those measurable outcomes. Marketing becomes laser focused. Every dollar goes towards attracting the right client that aligns with who you are, and they know the sales pitch kind of changes, right? You don't have to now convince them to sign with you. They understand the value that you bring to them, and now it becomes that
Yeah.
little bit easier process to say, all right, we are now an actual aligned fit. So it's the first shift from we'll take, anyone to we'll only take the right ones, and that's how you protect your profitability from the start.
And your people.
Exactly. Well, that's the other part to this. I was focusing on the numbers, but yeah, you want to protect your people as well. You don't want sometimes you get a client that might seem good in the bottom line, but your team is stressed. Maybe it's causing some turnover from your techs, and it kind of starts to create an environment that you don't want. So you want to protect that as well.
Well, and I think no matter what type of company it is, you'll see companies really start to shift in uh, how they price their services. You'll see them maybe get rid of some of the lower tiers of services because they start to realize, like, yeah, I'm able to get, you know, 20 companies who are interested in $50 per user services, but those people are gonna waste all of our time. They're gonna open up way more tickets than like a real client. And it's just gonna be bad all around. Your profitability is gonna not look super at all.
Yep.
Just because your labor, your cost of goods sold is just gonna tank because of all the effort that needs uh to occur in order to service these clients. So yeah, I think you're right on the money here with this profit mindset shift.
Yeah, and I will say again, not every business is the same. And
Sure.
if all MSPs were focusing on the 10,000 users, then eventually no one would service the smaller accounts.
Right.
It's certainly not about just the size of your clients, but about whether or not they're profitable and you're pricing them correctly. So there's a
Right.
lot of layers that go into it, and there's not a wrong side. It's not a one size fits all. I guess that's what I'm trying to say, right? It's okay.
Mhm.
You don't want to grow to 1 million. You don't want to grow to 10 million, 100 million. You want to be, making $500,000 and you're comfortable. You like your team. Stay that way.
Yeah.
That's good. That's okay. That is extremely successful. So it's just adjusting it ever so slightly to make it a little bit better.
Yep.
Well,
So
this is
this is
fun.
the framework from service leadership on finding your target customer profile, or TCP. It's a step-by-step way to use your actual client and revenue data to figure out which customer segment drives the most value for your business. So again, you'll see me repeat this over and over. We're not guessing. We're looking at real numbers across your offerings, your customer accounts, and your revenue per deal. So obviously the result, you get clarity on which customer size segments is your sweet spot and the ones that give you the best return for your time and your resources.
And this is a good example. I hate to sound, I'm
Yeah.
just going to throw this out here. Usually that would go on the operations person, the CEO. This is an example of things that our CFOs do.
Yeah.
Yeah.
Absolutely. So we're gonna walk through a quick little example of what this looks like in practice. So you get to kind of see behind the scenes.
Nice.
So this is what it looks like in real life. You see at the very top, here's just the number of accounts per band. We use the service leadership model, so we use it by users. I think a lot of MSPs tend to price their customers by user counts, especially if they're bundling their services a little bit into what segments they're serving. But if these obviously don't apply to you, you can change these to be more specific to how your company runs. But the template is basically the same. So you have your segments, and all you're doing is you're counting the number of clients that you have for each product line. I did this so it fits into one slide. This document can be little and small. So it depends on the number of product lines that you have. So I have 3 examples here. But you can have, we've done this when we had 20, 30, 40. It depends. You can be as granular as you want. You can go buy, Microsoft license if you really want to. There's not really a wrong answer there as long as you're getting the right information.
Okay.
So you're doing that in just a regular account, and the total obviously should tie to the total of customers you're servicing. The second box is the total revenue per segment line. So you're just looking at, example of that 150 for the 25 users with product line A. How much revenue do you bring in for those 150 clients together? The green cells is what really we put in from your your books, so from your data.
Mhm.
Everything else that's not colored is automatically calculated.
Okay.
So this section number 3 there is that average, and that average is just looking at how much revenue do you make typically per product line. At the bottom, we get the annual company revenue target. So you put in how much do you want to, what is your goal? What are you trying to make for the year? And so you put that in there and it calculates. So what is, how many deals do you get? So you kind of get a vision of how many deals you have to get to achieve of that each band. Do you have to sign a contract to reach your goal? Or what's the company revenue if, the easiest route, let's say if you signed 100 customers, 100 accounts per each profit, what would you get?
Mhm.
So, as an example, you would get, if you sign based on the current average, if you sign 100 customers at that 0 to 25 users, you would only get $5,000 worth of revenue from that band. So you kind of get to see a little bit of that scale.
Interesting.
Next slide.
Sorry, I have like something in the back of my throat, and I'm like struggling. So if I
Do you need to
mute
grab
myself to cough, you know why?
Do a
do
good
you
cough.
need to grab a drink or something?
No, I'm good. I'm good.
Okay.
But yes, that is the first TCP. So now we get to talk about, now that we know our customers, we know where the revenue is coming from and what the split is, we can ask the questions, how are we delivering that? And how are we delivering it efficiently? So on the left, we got the $1 million mindset where everything is overhead. Now,
Mhm.
I have seen, again, a spray of different companies doing different things. I've seen extremely complex, balance sheets, income statements where it's super, super, super detailed and way too much. So every little thing is in there and it becomes like a maze trying to kind of, put all of them together. And I've seen basically like revenue and then no costs and everything is overhead. So there's definitely a mix. So all labor in this mindset, all labor gets kind of put into that big payroll bucket. So you have no idea which services are profitable, which ones are bleeding money. And it's like running a restaurant without knowing which dishes make you money, right? We want to make sure we understand that. So the result can be skewed gross margins. That makes pricing and staffing decision a guessing game. You hire or you cut based on gut feel, not real data. And because there's no visibility, you miss trends like service line, quietly eroding margins over time. It's one of those diseases that seek in without you knowing until it's too late.
Mhm.
The $10 million mindset is we allocate with purpose. Labor is mapped to costs by service, managed services, project, T&M, whatever segment of your business it applies. So you can see true gross margin by clients and by service line. So that accuracy lets you do data-driven pricing, adjusting
Mhm.
rates, packages and based on actual delivery costs. And then strategic staffing, which is going to be the huge part. You can know when you need to add headcount, ahead of time, as your sales pipeline is going through. So it becomes really key point.
I remember Brandy showed us this crazy spreadsheet, and it was like showing us, oh yeah, here's how many people we have on staff, and here's how many we should have on staff based on all this stuff. And I just remember like my eyes crossed, smoke was coming out of my ears. It was all very it was cool. Like it was
The
so
utilization
cool.
calculator.
But
Yeah.
like to dive into that
Yeah.
it was like it was like if I were to just like go sit in a NASCAR vehicle and they're like, all right, go win. What?
Yeah.
Yeah. Yeah. No, it's actually, and it's a trademark methodology that we have called Rotary. So revenue optimization through resource utilization. It's all in the numbers, guys. And it's like,
Oh,
it's not it. I'm a finance like convert. I was sales all the way, and I have such an appreciation for the excitement that is held within finance and how it can completely change your business. Change who you hire, when you hire, what you're offering, what customers you're going after. It completely changes the game.
yeah. Not to get off topic too much, but I still say it all the time. Finance is not a drip pan. We don't just collect all the stuff that comes out from that, right? We are actually your headlines. We're the ones. We're guiding you through that. But it takes time. A lot of MSPs, they're like, well, I just need my techs and my sales. I don't know what you're talking about. So like, no, finance is the way, the backbone. We'll convert them all, Sonia. We'll get it.
We will. It's exciting. Ooh, another exercise.
But see, you ask and you shall receive. Although it's not, it's just a fragment of what Brandy
Probably better this way.
We're gonna break it down a little bit more. We'll break it down here.
Yeah. This is only a fragment of everything that Brandy I think has, she did her webinar here. So I don't want to be repetitive, so I kind of cut this down. But it shows how the progression, right? The growth of starting from just knowing your TCP, what does that look like? And then from there, what can you start building on top? So this is the second half, and is to know your bands. So you get the first section of the number of clients that's coming straight from your TCP. So this is your client base, how it's broken out. You got your average MRR. Again, that's going to come from your TCP. Just spot check. Sometimes it might be some outlier of a contract. And very much like the other side, the green column is what you're going to be editing. Everything else is automatically calculated. So you get the average hours per month. That comes from your PSA. So where is your team actually putting their time? Even if, right, sometimes you hear companies say, well, I have an all-you-can-eat buffet style, and you just do a fixed fee, and that's it. We don't track time. That's still and very important to know how much time it takes to service each client, so you know that average by band. So in here you're gonna get your average margin per hour, your total revenue and total margin there. But you start to understand that you're perhaps, your 10, like if you look at the bottom here, it's going to be easier to show by numbers. So at the bottom, we have the over 10,000 users at 18% for cost and 24 per revenue. Now, that doesn't necessarily mean that all of your time this is the only client that you should be focusing on and spending time on, right? Perhaps you should be focusing just by only looking at one column. Let's forget the cost for a second. Maybe 30% of your revenue, is coming from that 0 to 25%. So it starts to kind of see where should be spending more time. Now, the cost part to this says, hey, even though 30% of our revenue comes from the 0 to 25 users, it actually costs 48% of our costs. You're upside down in that band. Where you get from the 10,000 users, you got 24% of your revenue, but 18% of your cost. You get actually more margin by working your 3,000 to 10,000 users by looking at 10% of your revenue and 5% of costs. So you get to kind of see that movement of, hey, what is truly my sweet spot, not only from the clients that I have from the TCP side, but from my team's organization. Where should I be spending my time? Spending my time on the marketing side, or how should I move resources inside of my team to service each group? Maybe you don't want to get rid of your 0 from 25 users, and maybe raising their prices is not feasible. Okay, and then let's talk about make sure that tier 1 techs are in there and that they're not any all of a sudden tier 3 techs working where it costs obviously more to to have their hours cost more. So it gets you into to see how can you change and organize your business in a little bit more profitable way.
And planning ahead, right? For resourcing. So if we're going to go after like really aggressively, sales is going to go after this segment of those 3,000 user accounts, then maybe you're looking at promoting techs up or hiring a higher level tech to fill that need, right?
And that's exactly what I was going to say. Is this is only giving us just a portion. This is just lumping all the hours from all of our different tiers or levels of engineers, right? So
Correct.
obviously we've got the L1, L2, L3, and then maybe you've got I think you guys even have it broken out for if people are doing projects or if they're doing structured cabling and so on and so forth, right?
Yeah.
So the different types of work that's being done, that's why it's so important that you configure your PSA, whether it's Synchro or Super Ops or ConnectWise or Halo or Autotask. It doesn't matter what PSA you're using. When we're looking at this, it's so important that you configure this stuff correctly, because if you're able to track these types of tickets require this type of knowledge and skill set, so these type of tickets always need to be an L2 or an L3 or whatever. Now you're able to determine, okay, now I have all of that mapped out. What kind of tickets am I doing for these clients over the last 12 months? And now you can then forecast, all right, we see this pattern. Now what are we going to see over the next 12 months? And I'm sure, even more goes into that, where maybe the CFO is sitting down with the COO to determine, all right, we've had all of these problems and it's because of this and we've fixed it. So we actually should have less utilization moving forward, or like that really starts to spark some real conversations about not only where the company's been, why has it been doing that, and how do we improve our profitability moving forward. And when we look at just the very simple version like this, it's easy for us to say, well, let's just fire all of the 0 to 25 user clients. I don't know that that's the actual solution, because obviously this is only a fraction of the information. But based on this, that would be my solution.
Some of them.
Yeah, for sure. And that's the other thing. You might look like once you break, or not break, but once you like expand that, and now you're looking at, all right, here's the list of all the customers in that band. Or maybe you create sub bands within that band, right?
Yes.
So then you start to look at trends and dig deeper and deeper through that.
Or you change your pricing methodology too for some, because maybe a 0 to 25 user is taking a lot of resources, but they're loving you and they're happy to pay more money. So value price that, right? Yeah. They're happy to pay more.
Maybe you just have a minimum of 30 users. I mean, I don't know, but obviously there's so much that could go into this, where I'm just spitballing ideas for you guys. But this is where it's helpful to have not just a bookkeeper, but a controller or a CFO who's able to sit down and actually analyze what your company's numbers are doing.
Yeah. I mean, 100%. Just by looking at this fake data in here, it already sparks conversation. Imagine if you're sitting down with your team and looking at this. Immediately it makes your mind spin of, all right, I get it now. I know what I'm doing. It's no longer going in blind. So that's huge. And I'd like to point out here, I have the underutilized, so the labor hours is how much time your team is spending for each band. The underutilized is just a sum of 100, so the remaining balance is less 100. This can mean two things. It could mean that maybe your team doesn't have enough work at the time. So that kind of tells your salespeople, let's go, let's add more. Or we could be misallocated time, right? So it kind of brings back to your operations manager to say, hey, is everyone entering their time correctly? Are we making sure that every ticket that every work that we're doing that is actually billable is marked billable. Is you going to the right agreement? So there's a conversation that happens on the back end, because garbage in, garbage out, right? We want to make sure that the data coming in there is solid. And when you do that, it will set you, up for success.
And then I'm sorry, go back to that slide. I have one last question. So is this implying, so we have 34% of underutilized hours. So 34% of all of our tech's hours, they're just sitting twiddling their thumbs, according to this spreadsheet.
According to this fake data, correct.
Sure. So according to this, is this saying that 48% of what we are paying our techs based on the hours they're actually working is going towards the revenue for the 0 to 25?
No, this is saying out of your entire payroll, your cost is going to be depending on how you allocate the top. So if you're just saying each person, Julie, right? So Julie is a tier 1 tech, and all of her hours goes to managed services. So that my entire payroll will go there. So that would be that 34% of my time would be eating your managed services profit margin. So that would be one way, just looking by person, by position, attached to their service line cost. Go ahead.
Okay. No, go ahead.
Or if you're allocating the payroll based on actual time spent, then let's say 90% of my time or 80% of my time is going to managed services. And then the remaining part in which I'm not actually doing a labor, a billable work or service work is going to your overhead. It's going to your admin costs. So it's, you know what I'm saying? So it's the split of, depending on which path you take to allocate your labor is how that's going to play out.
So I guess what I'm really wondering is, why isn't there a cost percentage in the underutilized row? So if we have labor hours that are not being utilized, we're still paying those people. So shouldn't there be a percentage of cost allocated to them doing nothing?
And perhaps, and there is, right? Because there's certainly a cost, especially if their salary, there's costs associated to them. It's not on the spreadsheet. So that'll be a conversation to have with your controller to understand, because under this scenario, 34% of your utilized time could be made up of 5 techs, 10 techs, right? So this is that summary visibility where they go dig in and say, okay, 5 techs are underutilized. Why is that? What is their salary band? How is their burden rate? And how much cost is actually, hitting the books?
I guess I don't know. I was just kind of hoping that the spreadsheet would just have like a list of names of people to fire.
I mean, this is the tea spilling session. We pick one company from the audience and we just go to. Maybe that would be a great webinar and be like, have you heard of a financial audit on YouTube?
Oh my gosh, no, I have not.
They pull up your bank statements and they just go through and say, why did you spend money here? Why did you do this?
That sounds
audience.
terrifying.
Scary. No, thank you.
It's accountability. It's the shame into correction.
Exactly. All right.
Wait, so the offering mindset is, again, that building block. The first is just looking at your customer base without looking too much into them. How many customers do I have? Then it's looking at how much time and labor is it taking to service them. But then there's the other part of this, which is your offering. So it's actually the products that you're selling. And again, I kind of see that push and pull between the two mindsets, which is one is we'll bundle everything. We'll include one product line that says you can have all of our hours, all of the software, all of the backup, all of the data, everything that you want. We'll just sell it and then figure out in the back end how to do it. Versus a 10 million mindset that's saying, no, we understand. Even if we bundling is not a bad word in MSPs. But even if we bundle, we understand what's going in there and how to break the cost of that bundle. So there is no, hidden cost volatility. We understand, we can predict the delivery cost. And there's no overextending of portfolio. We know, and I'm going to use it's not a bad number, but just a simple number. Say we sell these 10 things really well, and that's all we're going to sell. We're not going to start selling 100 poorly, right? Just because we can. So you want to make sure that you're very focused and not overextended, so that your quality doesn't, it's not this. You're not relying on heroics. You're not relying on your team to pull through a miracle and, oh my gosh, we finally delivered this project. No, it's a repeatable process. You know it, and you know it well. So you are strong on what you're running like clockwork. You can't scale in chaos. I think that's the thing. You can't scale when what you don't know, and you can't scale if it's everybody is just the alarms are sounding and you're running in circles saying, "Oh my goodness, we're gonna go out of business tomorrow." It's intense. So here is the little midway point. I know it's a lot of information coming at you guys, so I wanted to kind of do a quick pause for recap and to see if there's any questions. Any questions from the audience, but the highlights is the profit mindset. So we're competing on value, not price. The target customers, we know who we're delivering to. We are allocating labor correctly by service line. We're using real gross margin data to guide pricing. We're keeping our narrow and standardized portfolio so that we can do things with quality. And then we're focusing on that service that we can deliver very efficient and profitably.
Great.
Okay.
All right. Is there any? I don't see the chat, so I don't know if there's any questions or anything.
Not yet. We're doing good.
All right. Sweet. So now we get to talk about more things.
Right.
The cash flow mindset.
Don't worry, guys. There's only 64 more slides.
I struggled. I was like, okay, Julie, you need to calm down. This is clearly where I lost. So I was like, I need to remember, talk slow, don't overwhelm everybody with information. So like, wait, teach you everything.
I'm all about it. It's okay. Everyone will get the slides. Great.
It's a struggle. And I'm always available for questions. I know, sometimes when you're taking it all in, you're just listening, and then the webinar is over. Like, oh my gosh, I remember I should have asked this. So there is our information at the end, and you can reach out to us as well. But cash is the lifeblood of your business. But a lot of MSPs are still driving blind when it comes to cash. So on the $1 million sign, the mindset is this: if there's money in the bank, we're totally fine. So there is no cash forecast. Cash crunches they hit without a warning, and it can derail growth plans really quick. You start doing reactive decisions. So you hire, you spend, or you take owner withdrawals without knowing the ripple effects of what it's going to cost through your company. You get missed opportunities. You can't commit to, for big hire, a vendor prepay, or a marketing push because you don't know if cash is going to be there. Which then kind of results in this last minute borrowing. You end up taking on expensive debt at the worst possible time because that's where you're at. On the $10 million side, mindset side, you see, exactly what cash will look like 13 weeks from now. So you kind of have that clarity, the visibility into 3 months ahead to make confident decisions. You're making proactive decisions. So you take time with purchases, with hiring, order distributions to maximize your benefits. And you can spot the cash shortfalls early. So you see them coming weeks in advance, and you can fix the problem before it prices. Then the last point there is the strategic point. You can confidently decide whether surplus goes to growth, to debt pay down, reserves, right? Now you get to breathe and get to do things the way you want to do it at your pace without being stressed.
The 13-week rolling forecast thing sounds really cool. Do you have an example of like how to do that in your deck here?
Maybe. See, you're playing one step ahead of me. What? Yes. So cash cash forecasting shouldn't just be done when companies are in trouble. It's the tool that lets you grow without that fear. So this is what it looks like. And yes, there is no quick overview how to do this. It's starting off with your beginning cash. So the very first week, so count 13 weeks ahead. from the date that you're going to be starting this. Put that date at the top. Then you can start with your ending cash balance. So everything from here, so the first column on that first part there. I wish I had a little laser pointer. But that is going to be formula based, right? So, you just add in what's going to come in, what's going to come out. It sums up what your ending cash balance is, and that rolls over into your second week, and so on and so forth, right? So you can kind of see that wave coming in, coming out, all the way through. So it's automatic. So you're starting with your beginning cash, then you're doing the little green section, which is forecasting what's going to come in. So you say, all right, I expect to collect $53,000 from AR. There is a whole, I could do like an hour conversation on just this topic, but there's a way in which you can look at your customers, understand how quickly they pay, how often they pay, and how they pay. So you can project this out. And so you fill out this information based on that information. And obviously, ideally, you're selling. Now, in here, I said that you're selling every week. Maybe you're selling, selling is a little bit more difficult, or you're only invoicing once a month. It depends on, again, your business model, but you're putting that information in here. All right, here's what's coming out and what percentage of that. Again, there's a whole other side to this, but there's a percentage of what that becomes money right away. So you say, okay, this is my expected intake. And then you go the outflows. So now you forecast the outflows. Now, forecasting the outflows is based on priority. So priority number 1 is your must pay. No matter what, this is what I'm going to pay. And typically that is payroll, taxes, any critical vendors, and debt services. So we want to make sure that no one is going to be knocking on your door, collecting on you. And sorry, I just realized my dog is all over this place. But so ignore the puppy.
I don't hear a thing.
But yeah, so you want to make sure that no one's collecting, knocking on your door, closing down your business, or there's many worst case scenarios when it comes to debt, whether it's for your bank or your credit cards. We want to make sure that you are operating. And then priority number 2 is going to be your rents, utility, discretionary spend, things that you can start to delay or negotiate or send a note, right? If you really need and cash starts to become tight. And I put columns at the bottom there. This is kind of a priority number 3, but it's really not. It's going to be business focused. So whatever, sometimes I've seen PAX 8, for example, be very close, if not priority number 1, very high on the list of priority number 2 there. Because if you don't pay PAX 8, they're going to shut down your license, and now that's kind of your revenue, right? So it makes you, it's going to be dependent on your business and how you want to formulate that.
Great.
But yeah, nothing too complex other than some colorful, blue, greens, and reds here. It is a very simple in Excel of sum, right? You're adding these things together, and then you're subtracting from your total balance and seeing where you're at. So
it allows you to invest, right? It allows you to make decisions and risks knowing that you're going to have cash.
Exactly. Yeah. Like so the payroll, for example, I said the payroll are getting paid every 2 weeks or every week. Every 2 weeks here.
Yeah.
All right. It's the 90, 85, 92. Yeah. It kind of gets to see ahead. So you see that everything was going good for this company. We lost money on the week ending of July 26th. But then we made some money, 16, 70, 64, right? These are the additional. And then we went negative. So it's, it kind of gives you that. All right, maybe I need some income.
Why?
A lot of spending. I put a lot of spending up in here. You got $10,000 of your 1099. You got, your debt service obligations. So we got a loan for $25,000. You got some high spending. Vendor number 3 there. You got a $65,000 vendor. So you kind of see some stuff. It's all heavy on costs, light on AR.
Well, why did they do that? That was stupid.
Yeah.
This is Julie wanting to show you worst case scenarios that are showing really nice fruitful numbers. You're like, hey guys, even made up companies struggle too.
That's fair.
Yeah.
All right. And there, we've only got a few more, I swear.
I swear, I know. I don't even know time. Am I totally taking everything?
We have 5 minutes.
Okay, so 5 minutes. AR best practice. This is one of the fastest ways you can improve your cash flow is to really time down your AR. So making sure that you got short payment terms. So one, when you're negotiating, but two, there are ways to incentivize and Steve, there's ways to incentivize customers to pay faster. I don't know how. Please help me.
I have some ideas.
But there's ways to make payment easy, and you want to collect payments fast and quick. Not only because we're on this this podcast or this webinar, but alternative payments is a huge help to the next level now. Because it's a payment portal. We can do ACH, we can do credit cards and debit cards. We can really take a look at what money is coming in and what money is scheduled. Because you guys, customers go in there, they schedule payments ahead of time. So we get to see all of that in the portal. It is a lifesaver. I cannot tell you how many times I'm hours in the pinch and I'm logged into alternative payments. And I'm like, okay, I can breathe. There's money coming. So make sure your terms are good. Sign an agreement before your work starts. Sounds simple, but a lot of people start work before getting a signed agreement. Make sure that you're eliminating any issue of disputes, any payment delays. You have that specified and laid out in your contracts. You have a way to escalate your collections. So if things get overdue, you know how to elevate that from your AR representative, if you have one, to your controller, to your CFO, to a collection agency. And not to just overly make a pitch here, but alternative payments does have an awesome collection. I've used it. That's why I'm like proud, very excited about it. Simply because you can escalate that collections to alternative payment and have them kind of do the hard work for you there.
And then you can make the decision to let go of that client.
Exactly. And then following up within 5 days. It's a little change that you do that actually has a huge return on that action. Sometimes just like very friendly, hey, I just noticed your, this invoice is due. When can we expect payment? And you'd be surprised how many people respond to you and how many people will actually send you the money, which is great.
And I found that so it's okay to automate that. Obviously that's what our platform does, right? But I found that when the automated emails, at least the ones I sent, when it seems a little more like, hey man, just checking in, hope everything's going okay. Like, do you have an idea of when this is going to get paid if you're not able to pay right now? I'm just spitballing, so there's a better way to say that. But, I try to make it more like, not just about, hey, F you pay me, it's, they're my client and this is a relationship we've built, right? So check in, are they okay? They're, maybe something bad is going on with their business and they need a little help too. So, yeah.
Yeah, we're no one in finance is going to try and be like, get out. Even sometimes when we want to, in the back of our mind, we have the little green monster. It's understandable. Life happens the same way life happens to you. It happens to your clients. So, it's just having the follow-ups. You don't want to forget to message somebody, and now you're in a pinch and they're in a pinch, and you couldn't even come up with a payment plan. Not to use our own examples, but I know Next Level now, when something's going on with our clients, we say, all right, we get that you can't pay our fee. Let's figure out, weekly installments, whatever it might be, to make sure that, it works for both sides, essentially.
So I know we're running short on time. We do have a few more slides, so I think we're going to skip through.
Yeah.
If, and we'll see if time allows, but forecasting, we won't get into the other Excel, but like forecasting is something that I never did in my previous business, unfortunately. Just give us the high level on the importance of forecasting.
You can't grow if you don't know, right? So it's just, it gives you, if you actually go to the next slide, we can skip the words, we can go straight to the example. In here I put assumptions. So you get to play. This is the play. It's every CEO, CFO playground. What would happen if I increased labor from 3% to 5%? What would happen if my revenue grew 20%? So you get to see this in a 5-year view, and you have your actual data and your forecast data. So that plays into it. It is usually in a 3 statement. So, income statement, balance sheet, cash flow. And then if you have, depending on the business, you got a revolver in there, you got covenants, you got OPEX. That's all kind of calculated. It's a massive workbook. Like I said, it's a playground. You go to the next slide. This is that looking ahead into hiring. It is driven by the reason of the very first kind of slides that we talked about there. But it says, okay, we have position. When do we expect them to start? What's the base salary think they're going to have? And this plays right back to the slide before, right? So it's not a one document each. It's these linked documents that as you're working on here, it changes your revenue at your revenue, or it changes your costs in the first slide. And then you get to see a big picture. Every forecast should have a 1-pager. So that's the next slide. And this is that high level view. So if your executives come to you and say, I don't know what's going on in my company, you can kind of point them to this page and say, all right, here's high level, what's going on with your income statement, what's going on with your balance sheet, your statement of cash flow, what's your year-over-year growth, right? From your actual to your forecasted, what are we looking at? And then usually there's the visual aids, because nobody wants to look at a lot of numbers. So they say, oh boy, are we meeting our leverage ratio? Is our coverage, covered or not covered? So what's that baseline? So you get quick decisions from an executive sometimes happen really fast.
Awesome. This company is not
Very
healthy.
cool.
Not healthy.
I really just nailed them. But if obviously the forecasting, all of this massive spreadsheet is a lot and it feels like a lot, you can kind of just focus on 3, which is your profit drivers. So your revenue, your gross margin dollars, so not just sales, right? What does it take to really fund that? And then your SG&A forecast. So you want to make sure that is less than 50% of your gross margin dollars to make sure that you're expanding your EBITDA. A lot of buzzwords in there, but it makes sense, I swear. If you go just high level, 3 sections, you'll start to see your work start to have a little bit more traction.
Yeah. I love this one too. It's a good take home.
Yeah, for the KPIs, I just kind of picked, a couple that are gonna be, I think every leadership team should know cold, because it is gonna give you that full picture of profitability, productivity, client health, and growth. So service gross profit margin, your billable utilization, revenue by employee, MRR churn, AR days, customer lifetime, and EBITDA. So are we profitable right now? Are we running efficiently? And are we building a strong future? That's the 3. If you do follow these 3, you'll be able to answer those 3 questions. And it's going to say, in the section is, do we know it now? Can we get it? But it's going to take some effort, and we don't track this at all. So if you're answering this at home, at your office, kind of, you can see your own score of how well you're knowing your company.
So you're saying all 7 of those we should be tracking, and you were just giving us an example of what some people are probably answering.
Exactly. Yeah.
Okay.
You're going to be scoring yourself and saying, all right, how well am I doing here? Maybe I know everything, and that's really great. So you're on track to kind of make the right decisions. And then this one, again, sorry for talking your ears off here, but it's just, where do I start after hearing this 1 hour talk? What do I do? And step number 1 is just get visibility. So get some insight into your company. Then you go in and fix the leaks. Then you strengthen with forecasts, and then you align your KPIs, and that will lead you to that financially mature MSP. It doesn't have to be all today. It's just one step at a time, one KPI at a time, one look at a time will make you be running very different within the year.
Wonderful.
Yeah. Amazing. Thank you, Julie. Fixing
Yeah,
it
of
all for
course.
us. Awesome.
That was amazing. I'm sorry we made you rush through the end.
All good.
So here's what I want to do. For anyone that has questions, we're going to start an AMA here in just a second. For those of you who are not already a partner with Alternative Payments, I know Julie has sang our praises However, I just want to make it
I
really
wasn't
clear.
paid, guys. I wasn't paid.
She wasn't. She wasn't. I just want to make it clear. We are a platform that automates accounts receivable for MSPs. So if you're using ConnectWise, Autotask, SuperOps, or Halo PSA, we integrate with your platform. And we integrate with more accounting platforms than any other MSP focused payment portal. So I'm confident we integrate with your accounting platform too. So let us know if this is something you're interested in, because I got to tell you, we make it really easy to view all your invoices, send out notifications to your clients. You can even set up installment plans. We do it all. And the interface, as you can see here, is very simple but effective. And I bet Julie loves this screen. This screen is what gets the CFOs real excited. And then finally, we did add ConnectWise Sync. So if you're a ConnectWise user and a QuickBooks Online user, we now can sync invoices from ConnectWise PSA into QuickBooks Online. So let us know if you're interested in that. I will pop up a poll, and if anyone is interested, and seriously, no hard feelings if you're not, but if you're interested in a demo with alternative payments, let us know. And then also feel free to let us know in the chat, because I can't run two polls simultaneously, and I know you guys want to get out of here. Let us know if you're interested in a conversation with Julie, Sonia, or anyone from Next Level Now. We do not have any questions. So I feel like we are going to wrap this thing up here real quick.
Great.
All right. I'm just going to give it like 20 more seconds so that way I can say I at least ran the poll for a minute.
Yeah. And thank you, Steve. This is
Absolutely.
great. And Julie's awesome content. But these are the drivers that we're at Evolve right now, guys, the peer group and the maturity drivers that increase your multiples and your company's worth are all touched on here. It's all stuff that they're focusing on, all growing MSPs. So it's great content. Thank you, Julie.
Yeah. This was great. One of the things that I want to figure out is, how do I start doing some of this stuff for my own personal finances?
Right.
Because I don't think I need to do, revenue bands, but I think it would be interesting to, maybe do like a forecast.
Well, Origin does forecasting now, Steve. So there are personal finance apps like you told me about Origin.
So, okay.
They have forecasting
I just
capabilities.
signed up for Sequence. Have you heard of Sequence?
No.
Getsequence.io. This is not a plug. I'm not selling anything.
Just finance
I have no
dorks.
idea if it sucks or not. So don't go sign up and be like, Steve said I should use. No, I'm not saying anything. I'm saying I'm checking it out. Okay, that's all I'm saying. It seems really neat. It's like how you can do like flows, and you can have like boxes, and then you can draw arrows, and then you can make rules, and it does all that. It's like visual with your money, and it's for business and personal, either way you want to use it. So it seems neat. Like they've even got some rules in there. Like if you want to, for example, let's say you've got a bunch of debts, and not because you're a terrible person, but people have credit cards, right? And you decide you want to pay down your debt. Well, they've even got some rules in there for like if you want to do the snowball or the avalanche, or I just want to pay the minimums. So like they've got all these different like rules, and then they've even got maps where they'll show you like, here's how we recommend people set up. Like I'm a sole proprietor. I've got my business here, and then I've got my personal money here, and then here's how I pay all the business bills. Here's how I pay myself, and then here's how I manage my person. It's crazy. So I definitely am going to be playing with it some more. Again, this is not an endorsement, but check it out because I think, Julie,
Very
I
cool.
think you should check it out. I think it'd be a fun toy. I'll check out Origin again. I'm all for fintech. If you couldn't tell, I love fintech. So
Yeah.
A little bit extra when it comes to my personal finance. I have QuickBooks running for myself. I got the
Yeah.
things.
Oh my goodness.
amazing.
So
Yeah.
cool. All right. Well, thank you so much, Steve. Julie, thank you
Yeah.
guys. Thanks for coming.
Thank you.
Thanks so much, everybody. Take care.
Bye-bye.
Bye.